Okay, folks, welcome to Friday webinar. So this webinar will be recorded, and it will be posted on the thread itself. So you'll be able to find it here, okay? So I'm thinking about Friday webinar, right? I think I've decided not to upload Friday webinars because once again, right, I uploaded it the other time and there's not a lot of viewer, not a lot of demand, okay? But understandable also because Friday webinar tend to be very long-winded, it's not scripted, and the topic of the discussion is all over the place also. Like we don't really have a structured topic that we want to talk about. Okay, so Friday webinars are very free flow, very chill, more of a conversation rather than me presenting something. So because of that, right, I probably will not post the recording in the future. So if you like Friday webinar or more like a Friday chill session, of course you come for the session itself. Okay. So anyway, right, let's begin. So let's start off with the portfolio first, okay? So this week, not a lot happened also. I mean, in terms of the stock movement, there's quite a lot of stuff happening in the market itself, but on my overall portfolio, nothing really happened. My portfolio went up about 1% like that, but it is mainly from taking profit on the Micron short leg, okay? So as I mentioned to everyone, please take profit on your Micron short leg, which for me is about $3,000. So I took profit on that, but the long leg is still there. So now let's go through all the open position. Okay, now I want to cover something overall, okay, in terms of portfolio. So I understand some of you gonna shocked by the AMR, okay? like, like some kind of a heart attack by AMR when it actually went all the way up like 17%. But I mean, right now it's coming back down already, okay? It's still quite a way until the previous price, but it is still coming down nonetheless, okay? So maybe during this period, right, your portfolio may swing quite a bit depending on how much you are invested in the AMR short position. Because personally my entry price, right, my overall average entry price is somewhere around 321. 321 is somewhere around here, okay? 321 is somewhere around here. So at one point my AMR position actually went into loss as they go above here, but currently it is back down already, so I'm kind of like back in profit already for AMR, but not as much profits as I used to have. So you can see AMR profit now dropped all the way to 3,005. Initially, it was somewhere around 9,000 like that. So that's actually $6,000 worth of profit disappear from AMR. Okay, so during the high of the AMR here, right, my portfolio actually swing about 10K. Initially, I was like in profit for 20K like that. Then suddenly it dropped all the way to 10K. So about 10K disappear from my profit. But right now, the profit are coming back again really as AMR start to recover downwards, as they start to move back down. Okay, so now the problem with this movement, right, it was kind of like a very stealth movement. Stealth in a sense that nobody know really what's going on. But one thing I can sort of tell you is that during this movement, right, it is not just AMR. Majority of the other coal mining company also went up quite substantially. Okay, so one of the more popular coal mining company is the Peabody Energy. So you can see Peabody Energy also got similar movement upwards. Okay, quite similar to what you see in AMR. And the reason that was being given to this is the election. We have the Trump and Biden election debate that happens just before the rally, and Biden seems like on drug like that. Like he's not really speaking properly. He's like forgetting his speech, all those kind of stuff, and there seems to be a lot more confidence in Trump. Okay, so Trump in general. So this is not just for AMR. This is just for like a overall reading on the election. Okay, Trump in general, right? He is a very pro expansionary policy kind of president. So he want to sort of create all this pro-expansion fiscal policy, like giving tax cut, giving rebate, pro-business lah, okay? And because of that, right, it is what I will call inflationary lah. If you start giving rebates and tax cut all over the place, right, then the overall economy spending power is going to recover. And if the spending power recover and a lot of consumers are saving money here and there, right, then of course there will be more money going into the economy, and inflation, and of course cause a rise in inflation lah. So currently right now, inflation has always been the main issue lah, okay? So from a inflation perspective, it's not really a good thing. But if we look at inflation, right, if we look at a inflationary environment, right, one of the asset class that do well in inflationary environment is actually commodities. Commodities do very, very well in a high inflation environment, such as coal, iron, steel, grains, copper, or industrial metal. All these kind of company do very, very well in a high inflationary environment. Okay, so which I will believe it is the cause for AMR to rally. But if you try to like dig any news, right, you will hardly find anything also, because the last news that came out for anything regarding AMR is all the way back in May 31st lah, okay? But of course, this is all provided the fact that Trump will actually win the election lah, but it is still a very big question mark right now. So when this rally happens, right, I wasn't really that concerned. I feel that at some point it's gonna come back down, because it's not like as if Trump won the election like that, but it's just a bit of optimism coming in, a bit of rumors coming in, okay? And you can start to see the price going back down already. So now the thing that I want to sort of highlight is that when all this happened, right, you can see now we are on Friday already. We are on the weekend already. Market close already. But my overall floating P&L for the entire open position, right? All my open position, my floating P&L is still somewhere around $1,000. So it is not really that big of a difference from last week. I believe last week it was also around $1,000 like that. So we do have a lot of stocks moving like crazy. We have AMR moving. We have Micron moving yesterday. And on Thursday, no, on Wednesday also, Micron went up quite significant. On Wednesday, it went up about 3%, and then on Friday, it kind of like retrace and it undo the entire rally lah, okay? So on Wednesday, it went up, Thursday holiday, and then yesterday it kind of went back all the way down again. And then we have AMR going up, and then we also have Chewy still going down like crazy, but Friday it kind of recovered back up a bit. And then we got Applovin also went up 5% yesterday, come down, but you don't really see my portfolio moving that much. And that is the result of having what I will call a delta hedge portfolio, a beta hedge portfolio, where the entire portfolio is specifically designed so that it can withstand all these kind of individual stock volatility that is coming in, so that on a portfolio level, right, you are not panicking. You don't see your floating profit moving so much. You don't get suddenly kick out of your trade. And that's the reason why I am able to confidently hold on to AMR, because yes, even though AMR as a singular position suddenly went from making a lot of money to losing money, right? But overall, my portfolio, other things are still moving, other things are still making profit. Palantir is making a shitload of profit right now. So you can see Palantir is now up about 8K like that. Applovin also making a lot of money, up about going to 4K like that already. And of course, Toll Brother also start to make a bit of money already. Previously, it was like a few $100 only. Now it's like coming to $3,000 already. So because of all this interaction, all this mechanism, right, I don't really need to worry so much, and that gives me confidence to hold on to AMR. And when I say hold on to AMR, right, it is not like blindly holding on and praying that hope it eventually come back down. It is not that also, because at the back end, in terms of fundamental, in terms of the catalyst that is causing this movement, right, I know what is going on. When I know what is going on, I can correctly identify that, okay, this probably is just a temporary move. Trump is not like winning election right now. Also, if Trump doesn't win, then then the thing that caused AMR to move up is no longer there, and most likely it's gonna come back down. So I can deduce all this kind of thing. So the worst thing that can happen to you, right, is that you want to hold on to a position because you are very confident in your research, you have very high conviction, but you have to let it go because your entire portfolio is red. Everything in your portfolio is suddenly losing money. And then even on certain trades that you are quite confident in, you start to doubt yourself, you start to question yourself because you suddenly see such a big swing in your portfolio and you kind of start to panicking really. So these are the kind of things that a long short portfolio, a proper beta hedging portfolio will prevent your portfolio from going into that kind of direction. Okay. So it is not just say only, but it is actually occurring live. And by coming to Saturday webinar and looking at the portfolio live, right, you can see how it is playing out. And you can also see how you are following on your own portfolio as well to see what are the kind of differences, what are the kind of changes that you can make for yourself. For example, if today your portfolio went down by a lot because of the AMR or because of the micron, then you need to ask yourself, what are you doing wrong with your portfolio and why is my portfolio not suffering so much? And one of the reasons why my portfolio is not suffering so much is because, as I mentioned, right, the Palantir position is doing very well. And I also want to cover something on Palantir. Also, I have mentioned that I am very reluctant to put in the short leg for Palantir. Okay, a lot of people asking when short leg. But one of the things like adding short leg, going to add short leg or not. And the thing is that I'm personally not a fan of a zero risk trade, okay? Because right now, if you add a short leg to Palantir, right, you effectively get a zero risk trade because the short premium is higher than your long premium right now already, okay? But the thing is, if you add a short call position to your Palantir and then you get caught in this rally, right? Then you are actually losing money. You're not profiting already because your stock leg will start to lose money, and then now you need to sit and hold this position for the next 1 month in order for your short leg to decay, and then only then you can get the profit, okay? So if I were to add a short leg to Palantir, right, then most likely my profit on Palantir is not going to be 8,000 already. It will probably sitting somewhere around 3,000, 4,000 like that because the short leg is losing a lot of money lah. Then probably I will have to wait until like August expiration or even September expiration in order to get the maximum profit from Palantir. But if let's say right now, if I want a TP Palantir, right, I can actually get the maximum profit right now at $8,000 already. I don't have the short leg actually sort of capping my profit or even eating into my profit. We don't have this kind of stuff happening now, okay? So it is very, very tempting to get the premium. But let's say you are only getting $200 premium, $300 premium, but in return, right, you gave up $2,000 profit, $3,000 profit. Then you have to ask yourself, is that premium worth it or not? Of course, on paper, you get $200, $300. Who don't want 200, 300? And you will never visualize the $2,000, $3,000 that you have lost because that is opportunity cost. Opportunity costs do not appear in your portfolio. You cannot look at your trading journal and then your trading journal will tell you, oh, you actually lost opportunity cost this much, that much, because there's no way a trading journal can sort of quantify that kind of thing. But at the back end, as an experienced trader, right, you always have to consider what is the opportunity cost of adding a short leg. Okay, so now another thing that I want to cover is also recently what I have been experiencing is that in the past 2 months, I am actually encountering a lot of occasions where the short leg is actually hindering us. We got a lot of trades that actually goes quite well in our direction, but we were not able to take profit on them because we are holding a short leg. So it could be a vertical position or it could be a calendar position, but simply the short leg is eating into our profit. For example, Hershey is one of them. Hershey is one instance where we could have profit quite big if not for the short leg. And because of the short leg, right, we end up breaking even or maybe a very tiny profit lah. So even though we don't lose money or maybe we get a tiny profit, right? To me, that is a bad trade because we could have gotten $4,000-5,000 out of it. But because of the short leg, instead of getting $4,000-5,000, I'm only getting like $400-500. So that money that is lost, right, is actually, I will even consider it as an actual loss because we did not capture that profit due to structuring error. We did not structure properly, and that is within our control. Okay, so you need to recognize a lot of things as a trader. You cannot like, oh yeah, it didn't happen now, or then cut law, lose then lose law. Like you don't look back at why certain things are happening certain way. So Hershey is one very good example, but aside from which, there are also a few things that are a little bit harder to spot. For example, we could have exited Chewy with quite a big profit, but because we got the short leg, we were not able to exit Chewy also, so we are still end up holding onto Chewy. And then there was a situation with Adobe also. Adobe, we could have exited with a big profit before the earnings, but we got the short leg hanging around there, right? We were kind of forced to eat the loss of the short leg and then restructure the whole thing because Adobe, we actually got ourselves into some kind of a checkmate position where no matter where the earning goes, right, we are going to lose money because the short leg is eating so much of our profit. So there are actually quite a lot of situations that we are facing in the past 1 or 2 months where the short leg is sort of eating into our profits okay, and we were not able to make a decision that allow us to get the optimal profit. So now that is good news and bad news. The good news is that maybe I have gotten better in my timing, meaning to say that the moment I buy something, it start to move in my direction, and that's why the short leg is going into a loss lah. So if my timing is getting better, right, then I don't really need the short leg. I just need to put in a simple long position or a simple put position and a sort of simple call option or a simple put option. Then I am able to get maximum profit lah. I don't need the short leg there, even if the earning is like very far out or what. So that could be the silver lining lah, okay. So not everything is bad news, but I'm still trying to sort of see what else is going on, what are the other things that is triggering this lah, okay. And that's the reason why recently for the KBH I have chose to take a simple put option. This simple put option I believe that perhaps maybe KBH will immediately start to fall already lah, okay. So you can see from the price action wise, it does seems like there's a lot of downward pressure coming in. Even for Toll Brother also, we are seeing a lot of downward pressure coming in. Okay, so these are the two home builders short that we have that are in a form of a simple put option. KBH is a simple put option. Toll Brother is also a simple put option, meaning to say we are not putting any short leg on it. Okay, so another reason is that if market were to crash within this very short time frame, right, I want to be able to capture the maximum profit as I can from these two short without capping the profit okay, because we do have quite a number of long positions, so we need to rely on some of the short position without capping their profits, which is why there is no short leg okay. So there are a lot of reasons why we are doing certain things, and at some point, right, you simply cannot have like a instruction manual where you have to do this for calendar, or if it is like this, then you take vertical or what. You cannot have this kind of rule book, this kind of checklist ready. You really have to see what your portfolio needs, what is your view, and then from there you construct your own option structure that you need. For example, even though I'm entering KBH home with a simple put option, right, maybe for your own portfolio the simple put option may not work well for you, but I don't know your portfolio. If you show me your portfolio, then I can tell you lah. If you show me your risk profile, then I can tell you. But the KBH simple put option works well for the kind of situation that I'm in, the kind of thing that I expect from the market, the kind of hedging that I require for my portfolio. It works for me. But for you, maybe the simple put option might not be working for you. So in this case, maybe you yourself might want to structure your own option. On my end, I have sort of narrow the stock for you ready, but maybe on your end, you might want to take one step further by structuring an option trade that is fitting for your own portfolio and your own risk profile. Then you can sort of maximize the profit that you are going to get. Okay. And this is what I mean by you as a trader, right? There's no way you can go very far copy trading. So if you are just simply copying the put option, simple put option, because I put up a simple put option, then yes, you could profit something, but it is not the maximum profit that you could have gotten based on whatever your portfolio structure is right now. Okay, so these are all the things that you have to take in mind. So I'm not really going to go through much of the stuff here. They are pretty self-explanatory lah. Okay, Dynamac is a Singapore stock that we entered yesterday. IWM is a hedging trade. Okay, it exists only as a hedging purpose. So if the IWM is going into a big profit, it means that your other position are doing very bad. I don't really want my IWM going into profit also, because it will mean my long position all going to get cut loss really lah. Okay, so Applovin doing quite okay. McDonald also recovering. In fact, McDonald, let's take a look at McDonald. Okay, so McDonald, right? I am really counting on this to be the bottom lah. Okay, because as I mentioned previously, right, it is right at the trend line here, and then not only that, right, if this month were to be a bad month for McDonald, right, we are actually looking at 5 consecutive red candle for McDonald, which don't really happen often lah. Okay, and I mean from a technical perspective, we do have a lot of support and a lot of buying here around this level lah. So I am hoping McDonald can rebound from here and then continue to go up lah. Okay, McDonald is a company that is quite sensitive to interest rate also, because it is not really a fast food joint. It is more like a real estate company. And if we start to see yield going down, then most likely McDonald can somewhat recover. Okay. And if it does recover, I am looking for it to at least retest the previous high lah. So personally for me, I do have quite a significant stake in McDonald lah. Okay. Beyond what you are seeing here, the stake is not so much, but beyond this, right, I do have other long-term position on McDonald where I have a cash secure put option on McDonald that's worth like $300,000. On top of which, if we get assigned, right, if I get the assignment, I am looking to take covered call also. So the covered call itself, it can get me about $4,000-5,000 every expiration lah. Okay, or meaning to say every month there is about $4,000-5,000 worth of premium to be collected lah, if McDonald decide to go sideways lah. So I am perfectly fine with holding this for a very long term lah. Okay, in fact, somewhere around here, June, 1 month ago, right, I actually collected quite a big fat dividend, also $1.67 dividend. I think I was holding about 2,000 shares in McDonald's. So this come up to about like 3,005 like that worth of dividend that came in lah. Okay, and since then, right, McDonald has been going sideways lah. So the covered call is actually playing out. Also, the covered call is actually decaying, where I will get another $3,000-4,000 from the premium, which add up with the dividend will goes to about $8,000. So even though McDonald is not really moving, right, I'm actually getting quite a lot of premium per month from stock like this lah. Okay, so these are the stuff that maybe you might want to consider. So now the question is, why, if I'm doing this at the back end, why did I not put it up? Because McDonald is $250. If you want to play one contract of cash secure put, right, it will cost you $25,000 already, which is quite a big amount. Okay, which is actually quite a big margin to put up. Like most people, the account itself is $25,000 already. You can't play one contract of put option, cash secure put option on McDonald, and then your $25,000 gone already. So in order to be able to do that kind of stuff, right, your account need to be at least close to like $600,000-700,000. Then you can do this comfortably lah. Okay, because if I have like $200,000, sorry, 200 two so 2000 position, 2000 shares of McDonald, right? If it goes down to like 240, right? If it goes down by $10, right? Then that's actually quite a significant loss coming on in also lah. So it is not a buy and blindly hold. I need to be able to manage the beta and the delta properly to ensure that the price going down and the kind of dividend and the put option, the cover call that I'm getting, it all balance out those kind of stuff lah. Okay, so it requires a lot of active management so that the risk doesn't really get out of hand also. So there's a lot of not only the capital requirement is a lot, but the management, the management of this trade, you have to keep an eye on it, is also a very, very important aspect of this trade. And these are the two things that most of the time the retailers are lacking. They just blindly copy and then they sit there, wait for instruction. This kind of trade, you cannot wait for instruction. The moment you sit there waiting for the trade update to come out, right, you'll probably end up losing a few $100,000 already. Okay, so but in from the perspective of this trade alone, right, I think this trade is still doing fine. Currently taking a loss, but I think as long as it start to recover back up, it should be good lah. Okay. Next, Pfizer. Okay, Pfizer is something that currently doing quite bad, but it is making a good attempt to recover. So the option itself expired on August lah. Okay, which is not far away. Not far away. It's about 40 days like that, only 40 days like that left on the calendar. So perhaps I may consider just getting out of this trade right now, just eat the loss. There is still 14 cents left on the premium. If I were to just simply let it expire, right? If I put this 0, then I'm gonna lose about 4,005. So right now I'm only losing about 3,002. So the question is, do I want to save that $1,300 or not? I think I would lah. I think I will save that $1,300 and just take the loss right now. And then instead of taking a call option, right, I may actually take a stock position instead, because the only reason why I want to get out of the trade is because I don't think Pfizer can go up fast enough before the expiration, before the September expiration. I don't think Pfizer can rally fast enough lah. Okay, but it is still a good long position stock to take lah. I will feel it for the current option that we have is only a issue of insufficient time. So I might as well get rid of this and then put up a stock position. So now why is a stock position good in this situation is that sometime in 26 July, which is very, very soon, only 20 more days, right? There's a dividend coming in about 42 cents per share, which is I wouldn't say significant, but it is still something that you can capture lah. Okay, it's still a profit that you can capture. And because if you're holding call option, right, you don't really get you don't get dividend from holding call option. Okay, you only get dividend from holding the actual stock. And your call option don't really adjust for dividend also. So there's I feel there's no point in holding this call option. I will change it to a stock position. And once you have a stock position, right, not only you are getting dividend, you can in fact start to sell covered call also, which you will get more premium out of it lah. Okay, so it is exactly like McDonald's situation here lah. So it's something that I may pivot into coming week lah. Okay, so do take note of Pfizer. But of course, if you want to do similar thing, right, you want to sell covered call, right, then bear in mind that when you buy Pfizer, you have to buy in a block of 100, because every covered call contract that you sell is 100 shares lah. Okay, but unlike McDonald's, Pfizer is very cheap. 100 shares of Pfizer is only 2,800, not 25,000. So it's a very cheap share that you can afford 100 shares lah. Okay, or if you want 200 shares, then it is like $5,600 is something that is relatively affordable lah compared to McDonald's. Okay, so Pfizer, Hershey right now, this is my complicated Hershey position lah. Okay, if you kind of recognize this position, right, it's very similar to Iron Condor. but it's a it's an iron condor with a stock position instead of a call option, instead of a long call option. So it's like a very weird iron condor lah, okay? And in fact, we don't really do iron condor here, but we are kind of like, or I'm personally kind of pushed into doing this kind of position for the sort of situation I am in. And then at that point in time, I have realized that, okay, in order to make as much of this situation as possible, I have to do iron condor. So I went for it, okay? And what you will notice here for Hershey, right, is that in the previous week, you will see the call option and the put option, they are somewhat similar, meaning to say one side earn 3,000, the other side lose 3,000, okay? Or one side lose 3,000, the other side earn 3,000. So they kind of balance out with one another. But what you can see here is right now, one side is actually, the profitable side is actually getting more and more profit. So in this case, the put option side, okay, the put option side is actually getting more profitable, but even the covered call is actually getting some profit. So now the difference between these two, right? The difference between these two, the net position, okay? The net position right now is somewhere around $1,700. Last week it was break even, but now it is $1,700 already. And the reason why this is happening is not because Hershey is moving. I don't really care where is Hershey moving. In fact, Hershey is not even moving at all for the entire week. You can see the entire week it kind of like stuck there. But the reason why this position is actually earning money is because of the time decay. Okay, the time decay, the theta decay that's happening because iron condor in general, right? You are actually getting the time decay on both the put option and the call option. So what you can see here is you can see the put option here, the short leg put option getting about $390 in profit, and then the other side, the call option getting about the cover call getting about $780 in profit, which add up to about $1,200, $1,300, okay? And then you have the long put option and the stock position evening out. They cancel out each other, but it is up about $500, okay? It's up about $500 because the put option, the long put option actually still have time value, that there is still time value. So the difference of $500 is actually the time value along with the time decay on the short leg, right? You will see the profit start to go up about 700 already. And if this were to go on next week, right, the profit may go up to 2,000, the profit may go up to 3,000, and then the cap, right, the cap on this entire position is actually somewhere around 5,000, okay? So it can go up to a maximum profit of 5,000 because the premium on this is actually 5,000. The maximum premium I can get on the short leg is actually $5,000 because the longs are going to cancel each other out, okay? So these are the things that you have to understand. These are actual mechanic of trading options, and the only way for you to learn all this is to learn option academically as in you understand all the nitty-gritty detail about option instead of just going for online courses and taking all the shortcut method. Because if you go courses and learn all the shortcut method, right, you are not going to learn all the option Greeks, what is theta, what is delta, what is gamma. So one of the things that I can tell you is for iron condor, one of the risks is actually gamma risk. Gamma risk is when the options are near expiration and it suddenly goes in the other direction, your gamma can spike and then all the delta go all haywire. And these two here, these two that are supposedly meant to cancel out each other, right? They no longer will cancel out each other. So these are the weakness and the strength within this position that I understand. And when these weakness start to manifest, right, I have to start putting in precaution measure, or perhaps I have to start cashing out so that those weakness doesn't become losses. And to make all these decisions, right, you really need to know option in and out, aside from just going for guru courses, which is why even right now, people come to me for option course, right? I will tell them, I'm not teaching what you are looking for. So you go and learn on your own. What you want is not what I'm teaching. So I cannot help you. You want shortcut, but I can't give you shortcut. So you can go and find yourself, because I legit have people asking me, so your option cost too long. Can do weekend one or not? I'm like, no, I can't do a weekend one. Okay. So anyway, right? The other positions are self-explanatory lah. Okay, how come? Okay, why is there a $2 here? Did I put wrongly? Okay. So Palantir doing very well at $8,300. It kind of offset the loss from AMR lah. Okay, AMR went down a bit. So this SEMR, unfortunately, right, it may end up in a loss, but we still have a bit of time to sort of wait for a miracle to happen. But yesterday dropped like 2% lah. Okay, so I'm kind of taking this as a loss already lah. I'm not looking to recover any money from this lah. Okay, I'm kind of considering as a write-off already right now lah. So it's quite unfortunate also, because at one point we were actually in quite a good profit. We could have exited, but we didn't lah. I believe we got a little greedy, and when we want to exit, right, we were met with very thin liquidity, and we were not able to get out of the trade. So it is an unfortunate situation for SEMrush lah. Okay, even though we recognize that we need to exit, the liquidity is not there for us to exit lah. So we end up having stuck in this position lah. So the rest are quite explanatory lah. Okay, so now going forward, next week is actually quite a happening week. We have the Chair Powell testimony coming in on Tuesday. So this is, I believe, the very long testimony that happens every quarterly, beginning of every quarter. So July is the beginning of new quarter lah. Okay, so Powell will testify in the Congress. It's the usual thing lah, but still I do believe the market can move lah. The market can get a little volatile lah. Okay. And then we, of course, on Wednesday, we also have the Powell speech. And then we got inflation coming up on Thursday, and Friday PPI coming up, the Michigan inflation expectation coming up. So almost every day there's something going on now. Okay, so you were bound to expect a lot of volatility coming into your coming into the market, coming into your portfolio. So as long as you have a very balanced portfolio, right, then it's good. It's good, because you wouldn't expect a lot of movement in your portfolio lah. You just like take profit on whatever you want to take profit. Maybe you want to take profit from Palantir, who knows? And then you try to limit your loss on those trades that are not doing great lah. Okay, and aside from all these economic data and events that are coming out, right, we are also at the beginning of a new earnings season. So you can actually see the bank's earnings are coming already. Or Friday before market, we have JP Morgan, Wells Fargo, Citi, and then I believe next week, right? The next week it will be Goldman Sachs, Morgan Stanley, and Bank of America coming out. So the banks are actually releasing their earnings lah. Okay, so banks' earnings are important also, because they will tell you what is the overall health of the market is like, the overall health of the economy, and it can act as a litmus test on whether or not stock market is doing well or doing bad, or at least have a good idea of what's going on in the overall economy lah. Okay, and of course we have Delta Airline also, which is I will say quite a significant company. The stock we should be looking at also, Delta Airline, it definitely is a good gauge of how the consumer spending, how consumer sentiment also is lah. Okay, so it is good to look at how Delta Airline is doing also. So quite a lot of stuff coming up. Okay, so now there's one topic that I want to cover. So if it's based loosely on what I just posted also lah. Okay, why I do not think the stock market will crash anytime soon, you can go and see. So this is actually from PIMCO. This article is from PIMCO. Okay, so you go and Google a $6 trillion question. So for those who have been with us for quite some time, right, we have covered this topic quite a while back, but I think it's a good time to bring up this topic again, because it is to remind ourselves of this opportunity that is sitting there, and it haven't take any effect yet. It haven't like sort of impact the market yet. And when it does impact the market, right, it's gonna be a very, very huge things lah. Okay. So now the money market fund, there's actually $6 trillion of cash that is sitting inside the money market fund. So money market fund is your fixed income lah. Okay. You have like $6 trillion worth of cash from all these asset management fund managers that are actually sitting inside the money market fund. And of course, why not? Why not? Because currently the fixed income market is actually doing quite good. You are getting like 5% fixed income per year. Some like in Singapore, there are some banks that is giving 6.2%. Some ulu, some those a bit look scammy one is giving you 7%. Don't know how they are getting 7% also lah. Okay, but overall the money market fund seems to be quite a good location for you to diverse out your money lah. Okay, instead of putting everything in risk asset like the stock market, the crypto, or even the real estate, right? Actual real estate are not risk. You can actually diverse into the money market fund, which is currently right now still giving out a good rates lah. Okay, but the thing with this $6 trillion, right, is that over the long period of history, right, money market always underperform risk asset lah. Okay, fixed income asset, no matter which part of history you are looking at, it always underperform risk asset. And at some point, right, at some point when the yield start to decline, when the interest rate start to decline, and the money market fund is no longer giving that attractive rates, right, then what you will probably see is you will see some of these $6 trillion cash, right, coming up. Maybe all the fund managers and asset manager, they will try to rotate their funds lah, or at least allocate some of the funds that they park inside the fixed income into risk asset lah. Okay, so that is to say there is $6 trillion worth of liquidity that is sitting there that haven't moved into risk asset yet. And when it does move into risk asset, right, we will probably see a very, very big rally, like probably S&P going to 6,000 level, that kind of stuff. Okay, and somebody is already calling Nvidia to go to like $200 like that. I'm not sure where Nvidia is sitting right now. Let's see. Nvidia is sitting at 125, so got people already calling Nvidia to $200. Okay, but of course, whether or not Nvidia can go 200, I don't know also lah. I probably need to do the work on Nvidia, but the message that I want to get across is there is $6 trillion sitting there, okay, that can go into the stock market anytime soon. So it is always very common for a lot of like all these macro guru, they start talking about money flow, this and that. But when they talk about money flow, right, they are always looking at like very funny numbers, such as the Federal Reserve balance sheet, which I don't think is a good barometer for money flow. And then they also look at the actual money flow, the M2 money supply, which is quite okay, but it is sort of like a lagging indicator lah. Okay, so there are actually liquidity that is sitting somewhere that you don't really see. Like this $6 trillion, it actually will show up in your M2 money supply, but it is just sitting there as a fixed income. It's not going into the stock market. So even though this $6 trillion appear on your M2 supply, right, it's not really affecting the stock market because it's just sitting there doing nothing. It's just sitting there collecting interest only. So sometimes if you do not really have the ability to look for certain information, or if you don't really understand what is going on, then you can actually miss a lot of opportunity lah. The kind of trade opportunity you can actually miss out. Okay, so it's kind of a little bit funny to also see all these macro traders talking about liquidity flow, and then they want to short the market, but it's basically going against what they themselves they are selling also, because there's actually still a lot of liquidity out there also lah. Okay, so I will link this article into Discord channel. You can take a look at it if you want, but what PIMCO is basically saying is also what I just explained to you lah, in a sense that if going forward, if the yields start to come down, right, there is a good chance that this $6 trillion can get divest out or rotated out. Okay. So now if you look at the 10-year yield, you can see the 10-year yield has been on a steady decline for the past few months already. Okay, it kind of peaked in April at around 4.7%. Is right now is around 4.2 like that. If you look at the 30-year yield, it has also declined by quite a bit really. Okay. So if the yield start to decline, right, then the money market fund may no longer become as attractive. So this is why the relationship between yield and stock, right, is that when yield come down, stock tends to go up, mainly because of this flow, okay, this flow of money into the stock market that is coming out from the fixed income. Okay. So it's something that you may want to consider also. Okay, so now building onto this, right, I have another data that I want you to sort of take a look also. So this is the earning recovery lah. Okay, this is earning recovery. So what we have is you have the Magnificent Seven lah. Okay, so the earning growth, you have the earning growth for Q1, Q2, Q3, Q4 lah. Okay, so of course for quarter two earnings will be coming out soon lah. Okay, because right now the earning season that is coming up is actually the earning for Q2. Okay, so Q2, Q3, Q4, all these are estimate lah. Okay, all these are estimate. So now the Magnificent Seven is referring to the 7 stock lah. Okay, the big 7 stock. Wait, let me pull it up. This 7 stock lah. Okay, Tesla, Nvidia, Microsoft, Meta, Apple, Amazon, and Alphabet or Google. Okay, this is the Magnificent Seven. So if you look at this chart, right, and if you look at the overall growth of S&P, I believe this is the growth for S&P, if I'm not wrong. If you look at the overall growth of the S&P, right, S&P is actually growing 51% in terms of earning growth lah. Okay, for the Q1 of 2024, and for Q2 of 2024, right, S&P is expected to grow about 28.7% in earnings, all the earnings in S&P 500, okay? But the thing is that majority of these earnings, right, is actually coming from the Max 7 stocks, okay? So the earning from Google, Amazon, Tesla, it actually contribute a very big percentage to the overall S&P earning. So if you strip out the Max 7, right, the overall earning is only 5.6. So you can actually see how much earning does the Max 7 contribute to the overall S&P 500 earnings, okay? But what I want you to see here is that the expectation of the growth, right, is that the growth on excuse me, the growth on the Max 7 is actually kind of like declining. It's kind of like plateauing. Excuse me. Sorry, give me a moment. Hello, so sorry. Suddenly there's like something. My nose quite allergic lah to stuff. I think there's some dust or what. But anyway, right, as I was saying, right, if you strip out the earning of the Magnificent Seven, right, the S&P, the remaining stocks that is left in the S&P growth is not a lot. But if you look closely at Q2, Q3, Q4, you can see the expectation is for the Max 7 earning to kind of like plateau a bit. In fact, Nvidia earning kind of like plateauing a bit already, but all the other company that is not Max 7, right, they are projected to grow. So if you look at the X Max 7, right, the earning is projected to grow, okay? Whereas the earning for the Max 7 is projected to contract. So if we have this kind of data, this is from Bloomberg, okay? We have this kind of data, it's actually quite sort of resourceful for us to come up with certain stocks or certain spread trade lah. Okay, in this case, right, I will probably want to long something that is not part of the Max 7 And then maybe I want to short something that is within the Max 7 or somewhere like something along that line. Okay. So I'm not really sure what kind of stock I want to short within the Max 7. There isn't really a lot of candidate. You may be tempted to short Nvidia, but Nvidia is actually the current leader for the AI lah. Okay, so shorting that is I would say not really a good way to go. So what I'm doing is I'm kind of looking at other long position that I can take. Okay, so sorry. Once once the sneezing start, cannot stop one. Wait, let me get a feel of it. Whether still got more or not. Okay, so my plan right now is to probably look at a long position outside of the Max 7, and then maybe just short the S&P 500 as a whole as a hedging position. Okay, as a pair trade. We can short the S&P 500 because Nasdaq is too strong. Okay, we can short the S&P 500 in order to sort of make it a pair trade. So hopefully the Max 7 stock will rally at the same time S&P 500 may kind of like decline a bit, or in fact we don't have to short S&P we don't have to really short S&P 500. We can play some kind of like iron condor or something to sort of like, even if it goes sideways, right, we are actually earning something. Okay, so we can actually structure something out of it. So this is something that I want to share. So now one of the stock that I actually kind of like look through is Target. Okay, Target. So Target is one of the bigger market cap and something outside of the Max 7 that is looking quite attractive at this price level also. Okay, so I'm not really going to go through the fundamental in detail, but what I have been seeing on Target recently is that their margin is actually improving quite dramatically. They actually trimming down on a lot of unnecessary expenses and all those kind of stuff. Okay, and it's also a sector that is kind of like inflation proof, a little bit inflation proof to perhaps the tech sector also. Okay, so if there's something that can trigger the tech sector to fall, most likely Target might not be affected also. So this is actually a good long position to have that is outside of the tech sector. Okay, so in terms of tech sector, we actually have quite a lot of position here, like Applovin is a tech sector, Micron is a tech sector, Palantir is of course also a tech sector. Okay, so now we want to diverse our long position a bit from tech sector. So I'm actually looking at Target. This is something that I'm planning to, it's on my long watch list. Okay, definitely this price right now, who knows, maybe can long. Earning is coming out very soon also on 14th of August. So we may have to come up with some kind of position here. Okay, so Target. And the other stock that I'm looking at is actually Scott Miracle Growth. I covered Scott Miracle Growth briefly. This is a fertilizer company, but this is not a fertilizer company for the agricultural sector, but it is more for the US consumer sector. This is for home gardening purposes. Okay, not for you to grow your wheat and your grains. It's more for home gardening purposes. So I think that like much like Target, right? Scott Miracle Grow also have been improving in terms of margin wise. Okay, so this is one area that I'm looking at for a short position also. Sorry, for a long position. Okay, so if you want to short something, right, against all these kind of longs that we are having, currently we already have a short on IWM, but perhaps we can also add another broad market short on S&P 500 or the SPY itself. So we see how to manage this as we go forward. Okay, but it is good to have all these trade plans ready at the back end, so that the moment the portfolio start to free up, the moment we take profit somewhere, we can actually put in the new position immediately and we don't miss out on certain movement that is happening in the market lah. Okay, so now also a brief update on the UJ trade position that I had yesterday. Before NFP, right? Before NFP, I actually go in for a very small position, and it turns out to be doing quite okay. It actually, shit, this is the wrong one. Yeah, this one. It turns out to sort of like, hey, wait, am I looking correctly? Yeah, sorry. Anyway, right, it kind of like came back down quite a bit. It came back down quite a bit over the day lah. Okay, it's about down to because I'm looking at two very different value, so I'm not sure which one is the right one. It's different by quite a bit. So anyway, right, I do hope going forward the weak data in the US economy, because we do have ISM service data showing a very weak growth in the overall service industry lah. Okay, and then yesterday, right, we do have unemployment rate going up to about 4.1%, which is somewhat in line with Federal Reserve expectation lah. Okay, but still it can cause a weakness is in the USD lah. So hopefully the weakness in the USD can drive this further down, and of course, waiting for the Bank of Japan to come and do some intervention also lah. Okay, so UJ is one of the pair that I'm trying to get my experience and my hands on in terms of forex movement, but at the same time, the only kind of free time that I can allocate for myself in terms of FX, right, is to study the Japan economy lah. Okay, so the reason why I look at UJ is it's more of like a side effect, because personally I am quite interested in Japan economy as a whole. I want to understand it better, and by understanding the Japan economy, right, I can actually have a very good idea of how USD and the Japanese yen, they will work out with relation to each other lah. So if I'm taking any kind of forex trade, right, it is always going to be a data driven, a macro driven. When I say macro driven, right, I'm not looking at very surface level things like the commercial, non-commercial. I don't really care about those, but I'm looking at more of in terms of the export, import, in terms of whether Japan is on their consumer end, if they are spending more money, all those kind of stuff. Okay, and then on US end also, whether rate cuts coming in, those I'm looking at those kind of stuff, not the very surface level stuff. Okay, of course, I mean, it will probably take a while for me to get used to the movement with respective to data and all the news. So probably the first few round you may see me losing money lah. Okay, but it is a learning process. And I'm only playing a very small position. If you want to convert it to like MT4, that kind of lot, right? Mine is like a mini lot. Like I'm playing a minimum one mini lot like that only. Like I'm not playing one standard lot lah. Okay, so it's actually very small amount. I'm just trying to get a feel of the movement lah. Okay, so if you want to follow my UJ, it's up to you lah. Okay, I'm not doing it as a trade call or what, but I'm just letting you know I'm getting into this, and hopefully maybe 1-2 year down the road, once I am more proficient in this pair, right, then I may do like a real trade call, a real proper trade call, rather than just saying, oh, I'm entering this, I'm entering that. Okay, and hopefully from UJ, right, I can slowly expand into perhaps Australian dollar, because Aussie yen, right, Aussie yen is actually in terms of the major pair, right, it is considered the most volatile pair lah, in terms of the movement of the pair itself lah. So it's something that that I'm looking at also. Most volatile pair in a most volatile non-peg pair. Okay, so in terms of the macro, they are the non-peg pair that is still considered very volatile. Okay, so but it will take quite a lot of time in the future lah, not right now lah. Okay, so now to sum this off, I'm looking at target for a new long position. In terms of short position, if we need it, we will probably go for a broad market S&P or a Nasdaq short position lah. Okay, so we are definitely going with option. So it will either be going for the triple Q or the SPY lah. Okay, triple Q SPY. So if you are a stock trader, you may want to see whether you want to do a CFD short on the index itself if you do not want to play the option, because if you want a short SPY, right, I don't think it's worth shorting the SPY because you might as well play with some leverage lah. Okay, so that's all I have for today. So all the best next week. I'll be around. I'll still be around next week. There's a lot of stuff going on within the market lah. Okay, so you will see me probably very active on Discord also. So if you do not want to miss out stuff, right, please put your notification on your Discord so that when certain things come out, especially when I'm tagging people, right? When I'm tagging people, so whenever I do new trade setup, I will always tag people. But when I'm just chit-chatting nonsense stuff, then I won't tag you all, okay? So maybe you can set up your notification in a way where if you get tagged, right, then you will get you will get some kind of notification on your phone, okay? So that one is on your end, okay? So you have to take care of yourself on whether or not you are gonna miss anything or not, okay? That's not my job, that's your job already. So you have to make sure you are doing everything you can on your end lah. Okay, guys, so all the best and have a good weekend.